Alrighty, we are back here. We are back. Hello, hello. So yeah, we're just gonna run kind of a. Sometimes what I think, sometimes I think it's the think or swim program too. Either it's got some sort of bug in it that screws up my computer, but I don't know. So it's kind of annoying when we're streaming because then I don't get to use all the tools I would like to for you guys and what have you, and then we just get this kind of trading view stuff. But anyways, so if this makes it work, then that's good. But it just always seems like TOS is the issue too sometimes, which is kind of annoying because there's a lot of good stuff on there that I'd like to use, but so it kind of dumbs down the stream almost. But we'll start here with Bitcoin, and we'll come back. Well, we should go to the market first. That's probably what we should do. So I'm going to use the VIX here on TradingView, and it's not going to be as good because I don't know why, but it's just something about it is just weird. Something about the TradingView VIX is just not right. So anyways, welcome back. Welcome back. More settings. Don't need that. Let's see, like you would imagine that's correct, but it's not. It's funny when you go to the volatility, S&P 500, that's index CFD. We're going to go here. Remove old drawings. All right, so as you guys know from following the stream, we look for the buy and the sell signal on the VIX, and that can help us kind of dictate how the markets will move. So what we had past couple days, right? We had volatility increase, volatility up. Okay? So what you saw the past couple days is you saw the markets come down, right? So market over the past couple days was going down until yesterday. Prior to that, we had volatility going up. So volatility is an uptrend. That helps us pull market back. Yesterday, CPI comes out. We blow the market up. As a result, what do we do with the VIX? We bring the VIX into a gap down to here, right? So I want you to focus on the relationship between the movement between the SPY and SPX or VIX. So think, past couple days, even though it's not on the screen, I know we're kind of just working off TradingView right now, but you can bring up your own screen if need be. We'll get over there. Yeah, I gotta run through this, right? So anyways, we get a nice long move on the market for the VIX. That brings the market down. Yesterday, CPI blows the market up and the VIX comes down. But once the market opened, it kept going, right? Kept running, and the VIX didn't do anything, okay? So this is what we talked about right at about the end of the day. And this trend looks a little goofy, but this is what we talked about right at the end of the day was that since the VIX isn't actually breaking away and breaking into a downtrend on the volatility index, and it's holding the hourly support, you can see perfectly to the penny, right? So yesterday, VIX gaps down to support off CPI, but will not break down support. That constitutes for a VIX bounce, right? And as a result, we use that to pretty much pull the market down this morning to start. Okay? We even use the 15-minute as a target today and a rejection. So a lot of times you're going to see a bounce on the hourly or a bounce on the 30-minute or a transition from the 30-minute and it goes to the 15. So the way that we pretty much watched the VIX today was right now we're holding support over the hourly until that breaks down. Obviously it hasn't. Until the market breaks down the VIX, then it hasn't, so on and so forth, and you get a bounce up to the hourly. So this was essentially one of the targets up for the VIX today. Once you transition over the 30-minute, so here's your 30-minute real quick. So that's 30-minute here. And then you have your hourly down here, which was the one that held the support into today. So this is pretty much the whole VIX jazz. All right. So yesterday, market holds 1 hour support. This morning, we transition the 30-minute, run to the 15, get resistance on the 15, break the 30-minute back down, send the VIX into a downtrend, and that's what allowed us to bounce the market into a long, okay, just recently. So we're going to get over there into the market now. And 1 second. 5 drawings. Alrighty. So pretty much it's not been the easiest day by any means. So we started with a little bit of a bearish move in the pre-market, followed by a long move into pre-market, followed by a sell move into the open, followed by a long move back to a sell move. So you're basically going like this. All right. So real quick, let's bring up Twitter, because that will help emphasize some stuff here, how we kind of started looking at the day. So we're going to start with, I think, the first post on the day, which pretty much says 4 hours ago, kind of late to this, but we should expect the 50 SMA back test, then watch over under direction. VIX never broke down yesterday, FYI. So you can even see that we're talking about how the VIX never broke down. You're looking for over under direction at the 50 SMA. So when we go into here, this is early this morning pre-market, little arrow with a target down to this yellow line. That's just the 50 SMA. So earlier this morning, that post 4 hours ago is emphasizing that we should at least be looking for a back test of the 50 SMA this morning. So when I go into a 1 minute extended trading hours chart, which kind of looks meh, but either way, that would have been right here. All right, so this was the first kind of trade call made to the internet, right? And it wasn't really much. Again, I was kind of late to it in the sense that, you know, by the time I logged on, I was really looking at stuff and getting in the groove. Like, there was only like 25 cents down on the market to hit that target. All right, so about here, say, hey, look to the target. There's your swing move down, right? That's the over-under, all right? So over it, it stays bullish. Under it, it flips bearish, et cetera, et cetera. All right. Once we got the data announcement to, you know, run the market down, so this is all data coming down, we then used a 1 minute and 5 minute micro strategy to then reverse the market. That's funny, micro strategy. I just said micro strategy, but it's literally, we used a 1 and a 5 minute strategy to bounce the market in the pre-market. So I'll take you back to Twitter real quick, because Twitter has all of the backdated, befores and afters to kind of give the timeline of the foresight analysis. All right, so we will be right here. So post this up in the Discord then. So this is in the Discord at 8:43 a.m. 1 minute data candle retrace on deck here. So again, this is where we're just tracking everyone that's traded the sell move on the data down and knowing that when we counterbounce, we're going to go and attack their volume shelf to piss them off, basically. So everyone that shorted on the 1 minute micros down, again, we're going back. Why did this? What is that? That was the weirdest thing ever. I don't know what that was. So yeah, we're going back to attack them on the 1 minute data set. All right. And then after we get the 1 minute, we will then transition to the 5 minute time frame. So then this is the next post 2 hours ago, potential 5 minute reset after data slam. All right, so GP lines up with 5 minute data view app as well. Obviously, after 1 minute, go 5 minute. The obviously after 1 minute, go 5 minute means obviously after you break the 1 minute, then you can transition into a 5 minute, as that's the sequence of move and volume. All right, so the 5 minute reset would be this little flex. All right, so strong arm to target, right? That's that flex. All right. So we're going to move up, and then eventually I make another post into the Discord at 9:07, which is the nerd face, buck teeth, investigator, flex, target. All right. Obviously, point being we go and get target. Okay. So that was the early morning pre-market trade analysis, foresight analysis, and calls for the group, what you can expect. Okay. So that's how we had to navigate the early morning pre-market session, okay? And then once we get into the open, it kind of becomes an up-in-the-air game, because we always look for direction above and below the 50 SMA on the market. So as you can probably guess, when you're having a day like today, you know, and it doesn't necessarily have to look like today, it's really just a point being that the market trades easier on the upside when above the 50, and it trades easier to the bear side when below the 50. Sometimes that doesn't always seem like the case, but that's the way it is. So today we have the market pretty much opening on the 50 SMA, right? So if you have the market opening on the 50 SMA, then it becomes a game of above or below. And actually, let me copy this bad boy, and I'm going to 1 second send this out to Twitter. So yeah, on a day like today, it becomes, you know, an over under 50 SMA day. That's one approach. That's one thing that I would look at, right? Hold on, I'm going to post this up and then I'll start talking. I'm trying to multitask right now and my brain's not having it. Wait a second. Sorry, guys. I know this is probably kind of boring and annoying when I'm doing something like this, but give me just a second here. What? How is that even make any sense? All right, there we go. So on a day like today, when the market's trying to dictate over under the 50 SMA, you can have fake outs, things like that. So the main approach in a lot of times these situations is the market's chopping, it's going up and down. Obviously, if some things are going sideways like this, you know, your best trade would be off a low and off a high, but sometimes it's not always the easiest to get an idea it's going to do that. So I'll just kind of show you, this is pretty much how we've navigated the market today since the open. There's a couple ways. So, man, all right, we'll just start like this. So these are the gap down targets. So again, we had a gap down today. So the first thing we're going to always do when we have a gap down or a gap up is we're going to look at the gap strategy. So for a second, don't worry about the 50 SMA. Just look at the overnight gap. So the first thing we're going to do, overnight gap, we're going to fib the open, previous day close. We're going to look for the 161 target. So naturally on any day when it's a gap up, gap down, we're first initially looking for continuation to the 161, unless there's a reason otherwise that tells us we shouldn't be doing that, right? Then we won't. But naturally, any day where the market gaps up, gaps down, we're going to first look for SPX to move to the 161, okay? So when the market opens with a gap down today, we're not thinking just run the market out. We're thinking move to targets, okay? So let's go into a 1 minute chart real quick. I don't want to put these VWAPs on right now. We're going to take that off. So anyways, this would have been your first target down today if you're looking at the SPX and you're running the gap system. So here's your open, and then this right here would be your first target on the day to the downside. So you can see that pretty much happens in 1, 2, 3, 4 minutes. So again, there's a lot of people, especially on that make videos on YouTube and just in general trading groups. Just lots of people that live by the not going to trade for the first 5 minutes, not going to trade for the first 15, not going to trade for the first 30. They will never, in that case, be able to participate in this sort of approach, in this sort of strategy, if they avoid trading the open. Because this sort of system and strategy a lot of times will take place right into the open. Not all the time, but a lot of times it will. So if you're someone who waits the first 5, 10, 15 minutes, this pretty much, not that it's no benefit to you because it doesn't always work like that, but a lot of times it does. So you can see it happens when in the first almost 3 minutes of market open, we dump to the target. So keep that in mind, all right? So when we have a gap down, we're naturally looking in that direction first, unless we shouldn't be for some other reason. All right, so let's go over to the SPY. All right, so same thing here with the SPY. We're going to go from the open to previous day's close. It could be off by a little bit. Same story. First target's going to be 161. It just so happens that today it dumps out in 3 minutes and hits the target. Again, unless you were prepared, ready to go, right in at the open, already had a short on for whatever reason, would be relatively hard for you to participate there. But, this could also be a situation where Maybe you were thinking about going long into the open and you run the gap down system. You go, oh, well, it theoretically can go down to 161 with continuation. So maybe I don't just rush into a long at the open, at least knowing the downside potential risk there. It's another way that you could maybe think of that. All right. So aside from the 50 SMA and the market's bullish this and it's this, that, ultimately the gap system gives targets down. All right. So that's one reason why we're looking down there to start on that day. And there's some other things as well too. So now what we should do is we should start adding the 50 SMA overlay. So now that we have the fib on there and we kind of understand why we'd be looking downsided to at least 606.02 on the SPY today, let's now look at the 50 SMA, which we're just breaking down right now. So again, you got to be cautious here on anything long. Obviously the market's already been going down, but we're starting to shift below that 50 SMA. And if the market wants to get acceptance below, then we just go into a downtrend, which could last for a day, 5 hours, 30 minutes, a week, right? Market can do whatever it wants. You just got to make sure that you're not on the wrong side of things because, that's just the way it is. All right, so we'll get into that. Actually, before I do all this back stuff, let's get you set up with the current stuff, which is we just broke down the 50 SMA. Okay, so you really, in theory, unless you think for whatever reason it's going to reverse and it's going to bounce, you're not long bias, okay? Anything but scalp longs, okay? So what we would really do is we would start, and it may not work perfect here, we'll see, but we will start anchoring to the downside here. And pretty much the name of the game is as long as the market maintains, I know, and it sounds dumb saying it sometimes, but as long as the market maintains below the 50 SMA and the 1 minute selling trend and 5 minute trend, the market stays downsided. That's pretty much the jazz there. And we'll get into some more examples here in a second. Okay, so what we know is wait, was that correct? Yeah, it was. Let me just double check. I still use TradingView, or I still use Thinkorswim all the time. Yeah, you're just seeing TradingView right now. I actually had Thinkorswim up before this, but I think it's the Thinkorswim program that screws up all of my streaming. Maybe there might be a bug in there that has been installed unknowingly. Maybe who knows? But it seems like TradingView gives, or Thinkorswim gives my computer issues in that regard. And then it's kind of annoying because a lot of the stuff we like to use is on TradingView or on Thinkorswim. And so that's kind of lame. I have tried everything from here in the moon back to get that system to like at least perform somewhat decent. It just never does. Yeah, feel free to hit the like button. Again, YouTube doesn't... YouTube loves when you hit the like button. Maybe not on this channel, but you never know. Maybe it'll do us some justice and help us. But feel free to hit the like button if you like. All right, cool. Anyways, on to the next stuff. So, again, that yellow line, that's the 50 SMA. So, we're going to go back to the morning. See what happens when you get below the 50 SMA. So, number one, we have the gap fib. So, we're looking down to 161. We get that. And then the market kind of chops, breaks down the 50 SMA, back tests. Remember, if you're below the 50, it's bearish. So back test, bearish dump. Then I'll get into why it reverses in my opinion. I mean, obviously it reverses because people bought in their support and so on and so forth, right? But then what happens? When you get over the 50 SMA, what is it? It's bullish. So over the 50 SMA is bullish. Okay? This is your over, under. Over above is bullish, under below is bearish. Okay? Just because you're below the level and it's bearish does not mean you can't bounce. And just because you're bullish and over doesn't mean you can't pull back. Obviously, if something is moving up, eventually it can pull back. And if something's going down, eventually it can pull back. The 50 SMA is just a dictating point for momentum shifting. How long the momentum lasts has nothing to do with the shift point, okay? You going above, or you taking the offense past the 50-yard line has nothing to do with the defense pushing you back the other direction. Though you may have gone this way, they could still reverse you, all right? So it's just the shift point where you're starting to gain momentum on one side or the other of the playing field, okay? So today, once we got the gap target and so on and so forth, and then we get below the 50 SMA, the recommendation to our private group was you want to stay bearish the market and only be counter long bias until you squeeze out the 1 minute trend. So we know that once the market breaks down the 50 SMA, it's a bearish move. At least until we start to do what? Get over the 1 minute trend, which is right there. And then we, a lot of times, can start to squeeze out the move. Because everyone that jumped in short is now underwater. Hence why I always say, when the market is below the 50 SMA and it's just starting, you stay bearish the move until you're given a reason to not be bearish. And in my case, this would be a scenario where you get a quick breakdown, and on your first test of the selling trend, it doesn't even hold resistance. Everyone's squeezing up. So they squeeze themselves back out, and then we go into an uptrend. Okay. So this morning, pretty much, once we got to here, started recommending going back up long, then targeting here. Ready? Now we reverse the process. So this is why today's been pretty tricky for some, because we had a bearish move below, which then squeezed out the short-term traders pretty quick. So we did this V reversal as opposed to holding trend down. And then since we go back over the 50 SMA, that puts us back into a new short-term uptrend. So where we just were anchoring down to track the move down, we now reverse the process and we're anchoring up from the yellow. So you see how the start point is always the same? Well, in this case, it's the same. Where we had the breakdown below the yellow here, and now we have the breakup over the yellow here. So I'm anchored to the yellow, anchored to the yellow. And what is the story? When you're above the market and you break out, you are bullish the market as long as it maintains the 1 and the 5 minute trend. Where does the 1 minute trend fail? Right here, boom, down. Let me actually delete this old one. All right, so we'll take this off, take this off, take this off, and we'll go like for. So again, when you break down, you're anchoring down. When you break up, you're anchoring up. The move will stay in that direction in the intraday as long as that trend holds. So you will see if we even go to a 5 minute here, ready? So I'm going to anchor to the 50 SMA breakout where the uptrend starts. This would be your break up, first pullback into 5 minute volume weighted average to price of that breakout and that uptrend start over the 50 SMA. There's your first pullback long, okay? And then if obviously we transition this back to a 1 minute, you're going to see when does that market kind of shift that long move down. It's not the top, right? Because this has nothing to do with tops, but right here. And then where does it fall off a cliff? Right there, boom, down. Okay. So today's a day where the market is playing games above and below the 50 SMA, not giving the easy trend away from the market. So we are at trend dictating point where the market's trying to it's trying to find direction. That's a simple way of putting it. It's trying to find direction. And what you're seeing me apply in real time is me trying to find the direction and then using tools in the real time to know the micro trend of it. So this morning we were downsided below, then midday we're upsided and above. Now we're back to chopping the 50 SMA, and you'll see that even these nothing's really, it's just doing that chop, right? So you will so I mean that's pretty much just it. So when the market wants to, it will always find its direction. It will eventually have a move. And what I'm going to keep doing in the real time is repeat the same exact process over and over. So just like right here, when we kind of started breaking down, I just already started anchoring to it because that's the approach for me, right? And so now that we've broken back up, what am I doing? I'm literally just anchoring back up the same move. Now, there's more to it. It's not about it being super clean, this, that, the other, but pretty much it just tells me that the market is now back on the positive side of trend on the 30 minute. So that's just it. This is the new 1 minute long trend of it. But again, the more choppy you get, the less these things hold and respect. So we're merely just looking for some direction off the 50 SMA today or into tomorrow. And that's pretty much just it. Twitter brought you here, Mr. Crayface. Let's go, brother. Let's go. It's good to hear that you're here from Twitter, because then that tells me that maybe some of the posts have worked to some degree. So the system does. I have explained this just the other day. So the 30-minute 50 SMA system works pretty much on everything. It's, I would say, maybe the most reliable on SPX, SPY, and it depends, because you could take an example where it works really well on QQQ and it looks like it maybe didn't work that well on SPY. So there are some situations where it might look really clean on some other markets, but I would say over the long term, consistently the SPY it does pretty well with. And the reason, and I contribute the reason why to being, if you do it on the QQQ, you have a lot of tech stocks in there, and it's just a more volatile environment than the SPY. Just as the SPY is far less volatile than Tesla is as an individual stock, right? The alpha, the alpha on Tesla is far greater than that on SPY, or the beta on Tesla is far greater than that on the SPY, so on and so forth. So when it comes to individual stocks can have, significantly more volatile than just the SPY, because they're individual players on themselves, right? So when it comes to using the 30-minute 50 SMA system, you may get more false signals. You may not get as much, things can be a little more trappy because it's an individual player and you don't have everything else there to cushion it and to, make it an average, right? So you could have stocks performing negative on the day, but there's enough big cap stocks performing positive on the day, so then the market goes into a buy signal and the buy signal performs just fine, right? Whereas while the market's in a buy signal and things are going well on the buy signal on the 50 SMA system, you could be looking at an individual stock and this thing's going in a sell move, right? So it can tend to be a little cleaner, but I still use it for individual stocks as well. You just have to be way quicker, because if the long does fail, then it goes into a sell move, and so you just have to be a little bit more quicker, and I would think you just have to be a little bit more risk oriented when it comes to individual stocks, because from all the studying I do and looking back and using it, that you'll just have more false moves on individual stocks, so to say. So yeah, that's that. So the market, again, is just figuring itself out. Right now, we're on the positive side of trend, so you're basically just going through a little bit of a long move. The market is still over the 1 minute volume weighted average price of this little mini break move. So therefore, the rules are always as follow. If you guys remember this, right? So the rules are always as followed for the 1 minute strategy at the 50 SMA. You only deploy this. You only deploy the 1 minute strategy at the 50 SMA when the market is breaking above or below. That is it. So the only reason you're seeing me talk about this so frequently right now, and from yesterday, I think yesterday, yeah, is because the market is interacting with it. So it's interacting at the 50 SMA. So we then, and on the day, it's the same day, right? It just interacted right there where my cursor's at. So we have to look into the micro right now, okay? If the market does this, right? If the market, holds this long move and then just blew up for the next day, we would no longer be looking at the 1 minute. We'll probably be looking at like a 30 minute or something like that, okay? Maybe a 5 minute or whatever. But in the moment that market is crossing the 50 SMA, we dial into the micro. So we can see the micro. Let's just call it an algorithm, if you may, right? Let's just say algorithms, which they don't entirely, but they pretty much do, run the market. I know that algorithms talk at moving averages. One of the big one is the 30-minute 50 SMA. So algorithms are looking for the market to get acceptance above or below. And in the meantime, they're going to shake out retail, shake out me, shake out you, kind of trying to predict all this. But one thing I've noticed is when we do go through a legitimate buy move, a lot of times they're going to hold that 1 in 5 minute VWAP. So you can almost think about it as if algorithms control the market above and below the 50 SMA and they're going to run a successful buy signal, they probably don't want to go below their own average share price, right? So on the successful buy and sell moves, the algorithms don't let the market go below their VWAP. Does that make sense? When the market is not doing a successful buy, move, or sell signal, then obviously those are times where that micro 5 minute, micro 1 minute will in fact not hold. So that just tells me in that moment, the market and the algorithms that really control things aren't fully on board. Okay, the market would still be figuring it out. Kind of like what we saw here this morning, right? We broke below the 50 SMA. The market, algorithms, anyone participating bearish from the first breakdown of the yellow today, let's just say it's everyone, retail and algorithms, right? Once that market started getting over that VWAP of that sell move, algorithms, no one's really positive at that point. So that's a situation where I can see the trend is not respecting. Even if algorithms entirely run the market below that level, then even their algorithm share price from starting there and down would be close to underwater, right? So it tells me it's just not it. They're not respecting it. And then we transition over the yellow, which is a buy move, okay? So we transition over the yellow here. This is a little cleaner on the 5 minute chart, but nonetheless. See, here's the start of it. With this one was quick, right? So here's the start of it. So the market goes over the 50 SMA, and sure enough, the algorithms and it holds the 50 SMA, and it even holds like that first initial kind of like pullback, and they keep the long pressing. This move is working a little better than the down move, right? So you can see the down move has one leg, and on the first retrace, it just reversed. This had one breakout, one pullback to VWAP, and starts holding, so on and so forth, all right? So they're kind of respecting that way, all right? And then bring it back over to here. We can transition to a 5 minute. So we have the 5 minute break, and that's the first test. So they're kind of respecting that long side over the 50 SMA more so than the downside. You can even see here the last little break of the 50 SMA didn't really do much. We've pressed back into a long. So just to finish up this whole spiel, on days where the market is interacting with that 50 SMA, we're trying to gauge if we're getting acceptance above or below. And in the micro, we will track the 1 and the 5 so we can kind of get a feel for that immediate momentum above or below those levels. And then once it picks direction and starts trending, then that's there's other things we'll go over. Yeah, so yeah, and easy. So do remember, right? So when you say that, remember that the market is in a long-term buy signal. So actually, Easy in the chat said something here that's actually pretty important, right? So we go through these short-term 30-minute buy and sell signals all the time, okay? But a lot of times the sell signals, especially over the past couple years, well, yeah, maybe, so the way it seems, haven't lasted as long, right? As buy moves. So there's a couple reasons for that. So number one, historically, the market goes up more than it goes down. And it stays up for longer than the periods that it's going down. So historically, things normally go up. So historically, if you're going to be a bear, you would have less time to perform the bearish move than you would the long move, because predominantly the move goes up in the long term. So anything short should always be seen as more short term than anything long, because historically the performance is on the upside. All right. Number two, if you look at, well, Yeah, we look at the weekly trend. So if we look at the weekly trend, right? So, and we'll start from back here, Alt V. So when the market went through its last bear market, this is where the sell signals, you should kind of have an idea they can work a little better or might have a little bit better follow through now because the longer term's down. So you have a long-term downtrend, and then when the short term activates a sell, boom, those will go down a little better, right? From here, Alt V, this bad boy, so now the market's upsided from here, all right? So when the long-term trend is up, all right, this is where you'd assume that the buy signals are going to be more back on the follow-through, and the short side may not have as much follow-through. Now, there's still some good dips in there, you know, overall, but you can see the trend's been predominantly up, and if we flip this to a 30-minute, you will see that most of the buy signals have the best follow-through. And we won't go through all of that, but that would be my take on it for you guys, is that if you're looking at a buy move on the 30-minute or a sell move on the 30-minute, sell moves work better when the market is bearish, and buy moves work better when the market's bullish. And obviously the market is back to positive. That's why we're seeing the market go up. And that is, yeah, that's that. And so you're going to want to be tracking that 1 minute and that 5 minute up. So pretty much your long bias, you know, as long as the market is over this 1 minute and this 5 minute trend off that break, which this one's kind of hard to get at the right spot, and that's okay. All right. So yeah, that's it. So again, you're just in the macro, micro, since the time of 1203/1204, you had to kind of watch upside. Again, I know sometimes it's challenging. These are not grade A setups by any mean. This market is not a grade A setup today. This market is exactly that. It's a trying to figure out the direction day from the start point. And the start point is going to be 606.18 right now. It already is 606.18. All right, so that's what's going on there. All right, over to Bitcoin now. I am using Mac, but I am using Windows, but maybe I should go to Mac. My partner Brandon went to Mac, and he says he's never going back to PC. But then also back in the day, the reason I got PC is because it seemed like all the trading platforms and programs, and then you had to use Parallel. So I'm like, I'm not going to use a Mac. So then I went PC, and now I feel like none of that matters anymore. So I should go to a Mac, you know. So, yeah. All right, moving over to Bitcoin. All right, so Bitcoin is basically at a breakout level / resistance. Sounds dumb when you say it like that, but again, generally breakouts are resistance points until they're not. Okay? Occasionally, you'll get lucky and things will break out of your breakout spot without resistance, but that's usually not the case. So yes, the market on Bitcoin has got back up to the targets that we talked about on stream yesterday. All right. For those, I would assume there's a couple of you guys that have been on the stream for at least the past week with us here. So you guys will remember just a couple days ago, we talked about selling the market to 92,092, but then I'm like, actually, I jumped the gun on that analysis. I'm probably wrong. We actually still have the higher low support down here at 94,087. So obviously without a break, we're not going there. And obviously if we hold support and rally the market up into a higher low, we're going to then go target the upside, which was basically here to here, somewhere in that area. So we'll go into a 5 minute here. And these were pretty much, and it might be a little off from when I did it the other day, but these would be your targets for that move. So there's always a lot of targets. It depends on what you're looking at. I'll look at micro targets and bigger targets. So these would be the daily targets from this low. So from this support down here, which was a daily, so that was a daily support down there. We have rallied the market up to the daily high side. Okay, that's a common one you will see on Bitcoin. You will see daily to dailies. Not all the time, but a common move that we get on the Bitcoin market is daily to daily, which is a daily support to daily resistance. All right. So the daily targets on the upside are the new breakout level. But this is a first kind of move into the breakout level. Generally, they don't break out right away. And if you're a pattern trader, I'm sure there's probably somebody out there drawing some trend lines or something like this. They're like, we got, maybe like, I don't know, something like this. They got a flag and maybe they're doing some sort of like flag stuff. That's the 5 minute. They might be looking at a 30 minute, be like, all right, we got a nice wedge here. We got a little wedgy magoo. So when we get over this, then it's going to be long. But the reality is whatever wedge this is, it's just really into the daily resistance targets. So really what matters is when this thing actually gets over it. And then you'll look for a back test, right? So right now it's just from daily support into daily long target. Remember, long targets are generally resistance and short targets are generally support. The market likes to play ping pong, and it's a game of to and from, right? So when I send the ping pong to your side of the table, you usually do what? Hit it back. So my target is hitting to your paddle, and then once it reaches your paddle, your objective is to hit it back to me, right? And so that's what the market likes to do. Short targets are support, long entry, and long targets are generally resistance, short entry. Okay? So we have met the daily kind of top-down resistance stuff here. I think it's going to break. We're probably going to have to go through some stupid sell move or something first. So I wouldn't really be in the short term long bias the market here because support was here. And we had these targets mapped off from yesterday for the market to go here. So now that we've achieved that, it's kind of like, okay, what's next on deck? And so personally, what's next on deck is, again, probably some resistance, probably some pulling back, and at which point we'll probably target 30 minutes, 4 hours, maybe a new daily, but it's too soon for daily. The chart needs more development there. So the only thing we pretty much can have happen here for now is probably some resistance that then goes back down to some micro higher low trends. Okay? If we're blessed and we're lucky, the market actually breaks out 102.57 and we start cranking and banking to the upside. I don't really think it's going to happen because I usually don't look for breakouts like that. But eventually everything, breaks out or breaks down. So it's just a matter of, when, not necessarily if. But you generally don't look for breakouts on first attempt stuff like this that we're seeing, right? A lot of times what you actually get is this, right? You'll get a move into the target and you'll see initial resistance, but then the market sets up, this kind of flag looking top, right? To try to get pattern traders in that move and then boom, like that. So to me, it kind of looks like they're setting up set up basically some sort of wedge, maybe some sort of flag looking pattern on the top that might be convincing some pattern traders to get involved there. And a lot of times that can then lead to a rollover, so on and so forth. Doesn't have to, but yeah, I wouldn't necessarily be looking extremely long bias there in the moment. It doesn't make a whole lot of sense to me. Unless you just, again, have the absolute conviction that the market's going to break out now and just keep going, right? So, that being said, we'll probably start... It's debatable. It's debatable. Let's take this off. Don't need that. Bears have to hit it and quit. Exactly. Exactly. So, yeah, we will... And we'll get into that real quick. So there's a breakout. So again, right now, the market is holding 30-minute support. So this is something we covered in the whatever room, or private room earlier today, basically suggesting that the market is holding the 30-minute pre-market, or 30-minute trend support. There's not going to be a breakdown in the micro until we actually get below that. So you can kind of see. So obviously, if you're not running this VWAP system, you don't have to run it the way I look at it. But you'll know that obviously we bounced, down here. There was a bounce, and then obviously it starts bouncing in here. So one would probably be like, yeah, so this is support, right? So when it breaks, it can go down, which is kind of like, obviously, right? If you go below and you break down, you're going to go down. But it's knowing that support can be built there before it's built there. So the other day, I'm running a 30-minute system here because if you look at the price structure here, that's where it breaks out. All right. So if you look at this kind of bottom U, top, and then right here is where it transitions above and breaks up. So what I'm doing is I'm tracking the volume from that break point up, right? So first seeing the quickest sort of momentum up for the breakout, right? And that would give me, in this case, this 30-minute chase up volume weighted average price. So knowing that when the 30-minute pulls back, this is a highly desirable area to get the market back down to. And then that's the 30-minute kind of higher low attempt spot. So this can be the 30-minute higher low. So now you can see how we're developing the support. It's less about the previous price action, more about where what the current price action is doing that can then create a pullback. And so we're basically creating support around that 30-minute volume weighted average price. All right. This was the most recent rally off. We're not going to get into that. That just gets too much short-term stuff. So it's pretty simple to say that as long as the market maintains this 30-minute VWAP structure here, you're not going to get really a shelf dive. You can get all some in-between random stuff. And then after that, we would, even move this down to a 4-hour, which this is kind of goofy because they gave us a 4-hour low here. So you'd actually be anchored here, but it's not developed enough yet. So we'd actually be looking at something like this here. And this is kind of funky because we kind of break out. Again, it's a goofy setup. I won't say it's goofy. There's just some conflicting stuff in this move that doesn't give me the most straightforward anchor points, which this is what kind of happens when you get into some smaller stuff. But, all this means is that at some point in the future, we're pretty much looking for a catch-up of this zone. So either market pull back to here or vice versa, market doesn't pull back, and then this calculates higher, and then eventually it meets price. And then we could see a 4-hour structure higher low. Okay? So we've done a bunch of the 1 minute, we've done the micro, we've done the 30 minutes. So if the 1s and the 5s and the 30s all stay up and just keep going, great. Micro charts running things up. Micro fails, we're going to reset to some larger time frames. And then the larger time frames get their opportunity to shine, okay? So just like the other day on Bitcoin here with the daily, so if we look at this chart here with this guy, so we're going to take this VWAP, we're going to move that bad boy like that. All right, cool. So you can pretty much see we had a red candle down, and then the market got bought up, and then it reset to support, and then back up. So it's that same concept, but now arguably on a 4-hour trend, or arguably a 3-hour and a 1-hour, and so on and so forth. So you can see from this leg, right? If we take this move, the 1-hour hasn't reset. Right? The 4-hour hasn't really reset. 3-hour hasn't really reset. 2-hour, no reset. You can even see the 2-hour higher low structure, right? So 2 hours just been up. And so there's no reset on the 2-hour, no reset on the 1-hour, and really no reset on the 30-minute, right? So we pretty much know as long as those 30s, 1s, and whatnot don't reset, that's it. The micro is kind of running it up right now. There's algorithms involved with pretty much everything these days to some degree. But yeah, even Bitcoin, because you have Bitcoin futures, right? So you have futures trading on Bitcoin now. You have some options. It's all the financial instruments are coming and have already been here, and more are coming. And it's already kind of been established in the financial banking sector with a lot of these things. Not everything, but there's some people that have been left out, but it's getting there, right? So the more mainstream it becomes, right, the less of a fair market in that regard, of the trading and the price action, totally supply, demand, fear, greed, optimism. Now when you get the financial sector involved, and now there's futures trading, and now there's options trading, right? Then, they'll start programming algorithms, around the futures trading. So it's all still a free market, but you're just getting more, of the bigger money, that has the tools putting their emphasis on it. So we'll see. Yep. You know what? Let's try it. We're going to give it the old Yanker Magoo. The old Yank Daddy. Alrighty, so I've just loaded up all my other stuff. Hopefully this doesn't bog down the streamer, make it. No, it'd been honestly comical as if the whole time it was really just TOS and I thought someone was manipulating my stuff and now I'm just a complete idiot, which totally valid, but nah. Don't think so. But maybe so. Come on. Okay, good stuff. Good stuff. Oh yeah, so that wouldn't really work. Copy a link. Go back here. Delete. No, cancel. No. Some more. Yeah. Copy. Delete. Pause. That the guy. Copy. Cool. Oh, and then yes, must take a photo. It's kind of funny because today's thumbnail says stocks pumping, and that's exactly what's not happening. It's kind of funny, but you know, good old Pepe. So yeah, let's, so yeah, I've loaded up everything else. It seems the stream is doing okay here. Yeah, again, you can see we're back below the 50 SMA, you know, same old. Hold up, what is this? What is going on here? Something doesn't seem right. There we go. I mean, this market is just being an absolute turd today, which is fine. I mean, it's not like it's anything we haven't seen before and know how to pretty much navigate. So again, you guys probably have seen the market has gone from long to bearish. So what ended up happening? Does anybody know what happened here? The long failed. Again, everyone pressing the market long up dropped down below their average share price and reset the market to the 50 SMA. So that's that's a way that I follow that. On a day like today where we're constantly going above and below the 50 SMA, I simply just like to track everyone who's trading and all the algorithms and everything that's buying above and selling below, and then, you know, knowing that your risk is this. So if you were buying any of this long, your risk is down to here if that fails. Thus, if you bought here, your risk would be to this VWAP, and then hopefully it holds support. If not and fails, you could run all the way to there. So it's kind of a measure of also knowing how much risk may be involved with something in the event the long would fail or the short fails, right? And then know what's funny is amongst all of this micro scale stuff, you know, the reality is all you're really doing is just chopping over an SMA. Right, that's pretty much it. So it's kind of an odd way that I look at it, but that's it. Is, you know, someone might be looking for support on this low, someone might be looking to roll a high. Meanwhile, I'm looking for the direction over and under, over and under, over and under. That's what I'm looking for, is a direction for the trend to take off in one direction or the other, not trying to pick this top and roll the market below the support, or pick this bottom and roll it up above the support. No, I'm looking for the market to finally get acceptance above or below and then trend out, right? And again, the way we can do that is we can track the micro scale and everyone involved in the market and know where their average share price is and know where their stop outs are. And the reason I say that the market likes to reset, when I say reset the 50 SMA, it's kind of like if the whole purpose of the market being bullish above this point is the 50 SMA, then obviously if it fails, we probably go back to the whole purpose of the long move in the first point, the 50 SMA. So I call it the 50 SMA reset because the strategy is above or below the 50 SMA. So if the long fails above and fails below, we most likely reset the reason for the trade back to the start point. And today's just a little choppy turd, choppy, which is fine. You know, a lot of people, you know, it's not a fun day with direction and all that, but it's kind of a fun day because I get to utilize the strategy over and over and over, and you know, it's kind of giggle because you know why it's choppy, right? We can't get direction. The trend is not having follow through one way or the other, and we keep resetting, everyone trying to get the direction when it's not just ready, and then they don't quite know where their over under is and their volume level that can reset the market. So that's the way I'm seeing today, which you guys probably already know by now because I've said it a lot. So maybe I will not beat the same old horse before you guys get bored of me. Oh yeah, love the thumbnail. It's a good thumbnail. It's a good one. Side question: how much money on average is traded per day on the Nasdaq? I don't actually know, but I could find out in 2 seconds by using ChatGPT, the best tutor in the world. I really enjoy ChatGPT. There might be other ones out there that are better or similar. You know, I just obviously have used this one, but I really enjoy ChatGPT because it's my own personal tutor. So. I always struggled in, you know, school in the sense that people are trying to give me information to learn versus me going and seeking out the way I like to learn. So when I kind of have the control of asking questions the way I want to, then, you know, it makes it easier for me to learn because I get to ask the questions the way that my brain interprets it. And then then it's your personal tutor that, you know, pretty much just works for you. So that's amazing. So it's been really helpful in that regard. So what was your question? Let's see. How much money on average is traded per day on the Nasdaq? I think it's in the no, it's going to be in the billions probably, but I kind of forget. I did this before. Yeah, so yeah, obviously, you know, it's got some WOK or WOKE training in it for sure. It's got the mind virus. Let's see. Yeah, so the Nasdaq reported a total share volume of approximately 803 billion shares, equating to 338 billion. I was kind of thinking in the billions. That was on December 9th. So I guess this is just pulling from December 9th, but looks like, you know, in the billions. A stubborn learner, maybe? That might be it. What's going on with the old XRP daddy, huh? Whatever this is. Just chilling. Again, whoever's long an XRP up here must have extreme conviction, because it's very statistically overbought. So, that being said, I mean, there is still some time left on this bull market phase, so maybe it gets another leg out. But, you know, if it doesn't get another leg out, she's going to be doing the old roll-ski, the old roly-poly dance. All right, so we're going to flip over here to some market internals because why not? Alrighty, so again, looking at some market internal stuff here. This will just kind of help you guys give a visualization of the underlying equities representing the pattern and formation and trading that you're seeing on the SPY or the QQQ. So here's your FANG names, right? So they started down on the day. So what'd you see? You saw your NASDAQ and your NQ futures go down, and then those FANG names got bought up. So then you saw your market bounce, right? And then you see them roll over. So then your market rolled over, right? So again, market internals on the FANG, just pretty much sell off, bounce, sell off. The issues, advancing and declining issues on the S&P 500 have pretty much been flat on the day. Go look at your stock market chart for the SPY. What is it? Down, up, flat. Again, no direction, finding direction, but no trend on advancing, declining issues. You can look at the NYSE down here. NYSE has actually been downsided today. Okay. You can look here at NASDAQ 100. They've been slightly long bias on the day. So if you look at the overall formation of the NASDAQ, you can see it's slightly more of like a higher low or a higher high scenario for the day, matching closely to the NASDAQ 100 and closely to that of the FANG. You can look at your overall advancing declining issues of the NASDAQ, and obviously there's a little bit of some lag. So, in the grand scheme of things, generally speaking, your FANG are going to run the market. So, if those don't break down, usually the SPY and the NASDAQ won't fully break down. On days where you have the FANG and every other single market advancing, declining issues running in the same direction, you get extremely trend-worthy days. Today, you have mixed arguments across all of the advancing, declining issues of these markets that I'm watching, which predominantly covers most of the market, pretty much all of the market. So you have a very mixed day on advancing, declining issues. And when you look back at the the SPY chart here, when we get back over into the SPY chart, what do we have? We have a day where the market is sitting on the 50 SMA and it's not getting direction. So we have a day where the market's trying to decide, does it want bullish, does it want bearish, does it want to break down the 50 SMA, does it want to hold support, and what are you seeing on your issues? This, right? I have no idea. Actually, I don't even know. Actually the first I've heard of the queen dying. I have no idea, to be honest. Again, I really don't. So not that I don't keep up with news, but like during the day, I don't really look at the news feed of the market. I do and I don't, but it's very low on the list of things that I actually look at for the market. Has it caught me off guard at times, and do I miss some things? Definitely. But is there more noise in the news than action? I think so. Personally. Data news, definitely different. But, things like, the Fed said this one day. Like if it, there's just so much inflow of stuff that the markets are gonna do what they want to do a lot of times. But like data news, that's big, that I pay attention to. But something like the Queen, that's the first I've heard of it. First I've heard of it. Um, yeah. So I don't really follow any Twitter accounts for news posts. And a lot of them are like, like follow the news for the actionable move on the stock. And it's like 10 times out of 10, by the time you get news, the stock's already moved because, again, programs and computers already know the stuff. People already know it's coming out. They front run the market. And then you have algorithms that jump on board so quickly. So a lot of news stuff, I just don't really pay attention to. Not that you shouldn't. Not that you shouldn't. Also, I will say that a lot of time, not all the time, but a lot of time, you can kind of guess and already know what the news is going to be, like the sentiment of the news. Um, it doesn't always work for sure, but I mean, one could probably assume any sort of articles being written about today is going to be like, oh, the market gives back its CPI gains, and the market is struggling to figure out the direction on the day as stocks whip back and forth on a day. So, I mean, I don't know for sure, but I mean, if I was writing an article and I looked at the market today, that's probably what I would write. Right? Or if I was writing an article yesterday after the CPI announcement, it'd probably be like, stocks set to open higher as market shrugs off the 2-day sell move and stocks are booming on CPI and whatever, right? And meanwhile, all that's happening, I'm just like, well, I guess we're over the 50 SMA. We should reset the short. So there's reasons why we should already be pushing it long, and then the news is just going to follow and be like, oh, CPI was great, market's up. Like yesterday, didn't look at any piece of news. Like let's see what it says real quick. So that's, again, a very common thing you will see when the market shifts positive and negative around that 50 SMA. You'll see the sentiment change in the news feeds. Stock market news. And we've done this plenty of times before. Oh, I'm sharing this screen. I thought I was sharing TradingView, but maybe not. Sorry about that. So, I don't even, let's see. Wait. All? Maybe that's it. See more? Oh, I just did that. But that looks weird when it's like that. Anyways, the stock market today: Dow, S&P 500, Nasdaq down, Tesla, Broadcom, movers, PPI, inflation report. Like basically throw everything into a title, but give me nothing. Okay. Stock market today: S&P 500, Nasdaq edge lower with rate cuts, inflation data in focus. Like, oh, thanks, Captain Obvious. S&P 500, Nasdaq fall after warm inflation report, decline in tech shares, live updates. There's nothing here. Which, again, it's a day where the market isn't really breaking down, isn't really breaking out, so what are you going to write, okay? Now, if we go back to yesterday, let's see. I would like to go back to yesterday. View full coverage 1 day ago. This is just not working the way I would like, because I want to go. I mean, I was trying to get back to like yesterday. I mean, this is 1 day ago. U.S. stocks edge higher after inflation data boost rate cut hopes. So what this website would be saying here is, right, so Wall Street today: U.S. stocks edge higher after inflation data boost rate cut hopes. So if it were my title, it would be what the title of the video was yesterday, which was the we are resetting the short sellers of the past 2 days of selling. As a result, we will take them to their max pain level, which is 606.09 to 606.25. The stock market, after squeezing shorts, is now opening with a gap up, which we will look to continue the gap up to targets of whatever it was yesterday. So that would be my title. And then at the end of that, it would be we will use CPI and inflation data to disguise that move and sell it to the public as the inflation data boost rate cut hope, and not the fact that we are squeezing out shorts from the past 2-day sell signal and then using a max pain level for target and using gap Fibonacci for gap and go target to direct the market up X amount of, percent. It's basic. It's like the Scooby-Doo mask, right? So like this is when they always take the mask off at the end, like, who is it, right? So if you took the mask off this title and looked at who it really was, it was the short sellers who were squeezing out from the previous sell signal from 2 days ago, and then just running up to prices that they would hate to get squeezed to, and that was simply it. And then when you mix it in with the day like, CPI, it'd be much easier to do that because there's volatility and everyone's like, oh, it's CPI, so slam it, right? So it makes it easier to do something like that off the back of the CPI. Alrighty, so just for fun, let's take a little gander here at the old heat map today. So it looks like Microsoft is leading the way with, actually I have no, yeah, but I mean Microsoft, at least in the S&P 500, they got a 1% gain on the day. Apple, a little 0.68. I'm not going to run through all of these, but predominantly you got Microsoft, Apple helping in the market today. You got Nvidia not doing its help. You got, Google not helping. So most of the market not helping today, you could say in the S&P 500 is going to be off the back of Nvidia, in the semiconductor market, the communications market with Google, and then also the financial sector with JP Morgan and Berkshire Hathaway. And also, damn it, Tesla, don't you start going down now. I have a short plan for Tesla. Not quite ready, unless it goes before what I'm thinking, but you should also arguably be planning for a potential short setup here in the near future with Tesla. All right, so Tesla's down about 0.67%. So, heat map. Cool. Let's go over to the crypto heat map, see how that's doing today. So Bitcoin green, Ethereum, Euro green. We don't care about those euros. No, I'm kidding, but yeah. XRP, red. Yep. Cool. All right, let's go to the sector tractor. So the sector tractor. It's a good tractor. Can do a lot of farming. Let's check this bad boy out. So 1 day performance, again, communication services are positive. Consumer staples are positive. And real estate's positive. So again, most of our selling has come from, again, today, energy, technology, materials, so on and so forth. Out of curiosity, I'm wondering what was the biggest gainer today. So it looks like Kroger is the biggest gainer, along with Hershey Foods, in the consumer staples market. So that would be interesting. Let's go check out Kroger and Hershey's for a second. Also, the market is back positive over the 50 SMA, so you should be anchoring here to the 1 minute. Same old. So we broke over here. They did a little bit of a reset, so it's kind of like right there, slash that one, and then now we're anchored here. So Pretty much the story being, as long as the market maintains this price now, you're okay on the long. That is also the risk of your pullback. But yeah, it increases, so you'll get the point. So again, you're back to the long side of the market, and your risk in the micro is down to 606.36 or wherever that price updates to as the market does what it does. All right. Now back over to, Kroger. So KR, that doesn't look like anything cool. So cool, great. Glad we look. Oh, I'm a dummy. I'm like, this doesn't make sense. Yeah, so huge move. I was like, what? Like that little tiny little nothing? I'm like, okay. So it looks, and so, this is a lot of times how it's going to happen too. So we can see Kroger's one of the biggest gainers in the consumer discretionary, I think, yeah, or consumer staple or consumer discretionary. I'm forgetting now. What am I doing? Yes, consumer staples. And you'll see just yesterday it started a buy signal. See that? Flipped over the 50 SMA. Trend goes positive. Now we open with the gap up. So they've had a pretty good move. All right. Was that built off the back of anything I'm missing? Extended hours? No. Yeah, gap up overnight. Cool. But yeah, so this one started a buy signal just the other day. Obviously, we can see that here. And then, rally out. So again, here you can see too, the buy signal start is right there. So you can see that is the Kroger market getting positive, the 50 SMA. So you can really, once you zoom out, you kind of know the level. You can kind of start to formulate the patterns around it. Again, you can see how we were downsided. Market in the micro starts to trend up. So that might have been like, like a 5 minute, something like, and actually I think that could be wrong. Hold on. Or wait, no, that's right. Sorry. So micros, and then right here, boom, the 30-minute, pow, there's your break. It might have been accompanied with some news. I don't know. All I know is you broke the key level. And then from here, you can see your pullbacks into the uptrend volume-weighted average price and mark it up. Okay. What was it? HSY? Yeah, the Hershey company. So let's take a look at the old Hirsch. What about old Herschel Walker? Is that right? I guess so. That just does not seem right. Guess so. Yeah. Then again, it's consumer discretionary, so it's not really a big deal there. All right. Out of curiosity, let's go to tech, because obviously tech's always a fun run. So, what I want to see, I guess, losers. So the biggest losers here today are Adobe. This guy's down $29 a share. That's kind of interesting. Oh, what do you know? Started, well, maybe not, but yeah, probably. All right, so again, this one started a sell move here today. So just got a little bit bearish on the 30-minute today. So again, you'll see real quick, ready? So look at this formation, look at this pattern, right? So this would be market above the 30-minute. Whatever reason comes down, not quite to it, creates like a bearish wedge, whatever, breaks down below the 50 SMA, trends bearish, right? And then again, from that start point, we have the tactic to anchor down, track that trend down. So we're going to go from the breakdown spot, and then we're going to anchor. Is that a low? That's just a low. Yeah, we're going to go high with that bad boy. And then we're going to anchor to the high at the breakdown. So that's not even really perfect. It should be moved over just a hair to right about there. All right, so again, as the story goes, you break down. Here's your retrace into the selling trend and down. Okay. Yeah, let's take a look at Adobe, though, because that's kind of interesting. ADBE. Adobe's got cooked. Probably went into a sell signal knowing this thing. Yeah, I mean, it happened last night, so basically you can see here, whatever. So this was earnings, right? So it's down big, but so it's really built off the back of earnings, but you'll see how the market was positive, and then leading into earnings, they started kind of flirting with the 50 SMA, And then obviously last night they broke down the 50 SMA, which again, it's really earnings, but you can see how the market was set up right at the over-under for earnings. So you would call that basically a setup, right? So as in the market is setting itself up, right? So we had the market positive on the 50, leading into earnings, pow up, and then that's the downtrend start right there on the 30-minute. Whacked. So again, the more you play with the right kind of system, arguably, or something that, you know, works to a degree, you'll start to see how things all line up around that same spot. So effectively, they set up Adobe right on the bullish bearish over under, leading into the catalyst event on earnings. Earnings go negative. They break it down to 50 SMA. Now it's in a bearish downtrend. And that's pretty much just it. Which actually, I'm kind of curious to see, because if the breakdown is there, how this actually performed. I'll take a look at the comments here in just a second on the chat. I'm just kind of having some fun. So the breakdown's really there. So if you break down back test, so we're going to move here to here. And this thing still hasn't gotten a retrace of that, has it? Might be getting it pretty soon. No. So they really been jamming that guy down. Not even an earnings retrace there. So anyways, yeah. Let's get back to the SPA. All right, so, oh, sorry, yeah, I wasn't, but so you see how we already retraced the 1 minute VWAP. Like I said, your risk will be the uptrend start of that move. So this zone would really be like that. So there is, and like I said, your risk is to the VWAP. So if you chase the move up and once you pull back, your risk is to the VWAPs. Sealed, done deal. How did he know? Because the market likes to screw everyone over. So the objective is to screw everyone over that was just trading the long move by pulling it back to support. Alrighty. Let's see. Wish I held my 400 calls into today. How low you think Tesla would go down? I haven't even really thought about that, to be honest. I've just really been thinking about the top of it. Which, again, we kind of started creeping into some resistance areas just yesterday, I believe. Let's double check ski. Oh, I don't want to ruin my play by giving it out too soon, but maybe I will. Oh boy. Again, you can see we're getting real. I mean, we are at this previous whatever all-time high. I'm not even concerned about that really, but again, you're starting to get Tesla into close to the +3 daily, and then you have +4 up here. So really, if the market ended up getting to, you know, the weeklies +3, +4 weekly, then I would be more inclined to start looking at a pullback, you know, kind of a short concept there. But otherwise, I'd rather just, you know, if it wants to top and pull back prior to a far more low risk area, then I would just rather miss it than risk it. So if we end up getting Tesla into these prices, then I'd be more inclined to watch for a short. Also could be built off the back of Bitcoin, because obviously they hold some. So if Bitcoin continues to blow up, then you'll probably see a little bit of a price appreciation on Tesla just because of that narrative outside of what else they're doing. And then that might time up with the Bitcoin. So again, you know, I might be using a little bit of Bitcoin to kind of do some timing on Tesla, and obviously MSTR and so on and so forth. But as far as where it could go, again, I mean, it's kind of irrelevant, because the things that I would use for that don't even, the targets won't come until the top is arguably there. Yeah. CVX. Sure. CVX. Probably in a sell move. Just based off the way it's feeling on. Yep. And it started a little bit of a bearish 30-minute sell move. Just, was that yesterday or... Let's take this off. I don't know if that was yesterday or not. Kind of hard to tell. Let's see. No, because this would be day. Yeah, maybe the day before. But either way, that's where it started. Right there. So I can zoom back out. Go into the 1 minute. There you go. So just the other day, that's where it broke down. It's 30-minute 50 SMA. And if you want to use a pattern, you'll see just before it, you know, if you look at, there was like a descending wedge or whatever, descending flag. I don't even need to draw the horizontal line because the 50 SMA is the horizontal line. So, you know, you could do something like this. Increase the size to big guy. He's a big boy. Yeah, so if you wanted to like make this a wedge pattern in here, so this would be market down to 50 SMA, trying to hold 50 SMA, and then break down 50 SMA. And if we go to the 30-minute, you'll see it. All right, there. And you can see clearly how we got bullish on that day over the 50 SMA, and then we come down. Try to hold, bounce. Try to hold, slipped a little below, bounce. Try to hold, fail, bearish. And then, you know, hindsight 2020, whatever you want to call it, you know, in the immediate, you can see that wedge formation occur. So there'll be someone out there that says, oh, okay, so we had a bearish wedge, so you know that's why it went down, which is true, but it's also because that is the breakdown of the 50 SMA, which dictates bearish momentum. And it was the market trying to hold it from breaking down, but was unable to, which then creates the wedge, and then the 50 SMA breakdown. Nice. CVX. 160 calls for January. Nice. Why is this like that? $160 calls would be right there. What do you know? Not too sharp, not too sharp. Let's check more. Is that today? What's the date? The 12th? Okay. All right, gonna bring this all back up. Oh boy. Come on, computer. Come on, little buddy. Come on. There you go. Again, pretty simple stuff here. Again, this is just where your long bias trend is holding up. Again, we broke out the 50 SMA. Market's more positive here in the immediate. So again, looking at your 1 minute volume weighted average price is up. Again, you're still holding trend positive. Oh boy. I'm probably not gonna do anything too crazy, but then again, I've seen other things. I've seen many things happen like that before. Why isn't Bitcoin going up, huh? I don't get it. I just don't get it. Why isn't it going up, dude? Let's check this 15. Let's check this 30. This 1 hour. Now that I could probably get behind. It's just kind of goofy the way they got it all set up, though. Just to, again, reiterate, you are not supposed to be short bias since the time of essentially 1240. Wait. Why is my shit always just not right? They always be switching my times. I swear. How is it even possible? How am I on... Why does my computer say? What is happening in my life? My computer says 1:15. Thinkorswim says, I don't even know. What does Thinkorswim say? Thinkorswim says it's 12:15. This says it's... Okay. This is correct. I was tripping. Like, what? Anyways, but yeah. Basically, since like 12:43... 12:44, you're supposed to be on the long side of the market. Yeah, I could look at IWM. IWM, it is bearish. It's been bearish since, well, I mean, realistically here, kind of choppy. But yeah, you just started a sell move. It looks like yesterday into today. So I would be looking right here on the move down. So you essentially got broken down here. Throw a little anchor on that. Low it, high it. And then we're going to flip this guy to the pre-market like so. And there it is. So there is your breakdown yesterday. So again, take the same logic that we're teaching on the SPY. So here's your breakdown of the 50 SMA, and then this would be your 1 minute volume weighted average price of that new breakdown. Do you see it? Do you understand? Do you see that? Do you see it again? Smiley. Unicorn. Nope, never look at GEX personally. I do not. No. What time is that? 1:17? An hour and 34 minutes. Ugh. Not bad, not bad. I was gonna work outside today, but I had some things to do, but it snowed, so kind of an excuse not to do anything outside today. Yeah. It is also the 12th, so 2 more days till then. Oh boy. Thinking about getting a new, unless anybody else has a recommendation here, maybe. I was thinking about getting that new Elgato 4K webcam now that my streams are kind of working again. So, yeah, unless anybody else has a recommendation on a webcam that is similar to that. I haven't done a whole lot of research on it either, but I was thinking about it. But it's also like $400, I think, and I'm like, is there another one that's probably as good that doesn't cost that? I haven't done that portion of the research yet, but if not, I'll probably end up going with that anyways. I mean, yeah, this looks fine, so it looks good enough, but, I guess if I really, But again, like I said, I did kind of plan on streaming again, so it's like, if you're going to be doing it all the time, might as well have good equipment again. I used to use DSLR cameras, but the problem with those is eventually they overheat and then they end up breaking, so I used to use DSLR cameras. So, yeah. Yeah, so the more viewer things is it's going to be very hard. So, I mean... Like I said, I plan on streaming, as long as the streams work. But again, like I said, I'm pretty pessimistic on that. Yeah, so again, all good. I mean, I really would love to forecast prices the way we do to 6,000-7,000 people, like some of the other YouTube streams, because it'd be fascinating to see how the price action moves. Or if the analysis would stop working, right? So if the prices that we're able to forecast pretty frequently, well ahead of time, sometimes hours ahead of time, were given out to that many people, I wonder if it would stop working or if it would work even better, personally. But again, usually the more you show something, the less it works. So maybe it's a blessing that there isn't that many viewers, because then the stuff we teach keeps working, right? So, debatable. Debatable. Are we gonna finally get a little bit of some love from Nvidia? I've been waiting on this puppy. What about AMD? Oh, wait, wrong chart. No, I'm a dummy. Yeah, see, this is another... I'm waiting on AMD. So I got AMD literally written down in a notebook, waiting on this one for potential long. You can see it's been down, so I've been tracking this puppy because, it's been hit down. So assuming that eventually it goes into an uptrend, we get a pop, right? So, going to be watching AMD here / tomorrow / whenever. These things will do what they want to do when they want to do it, but ultimately it's currently flirting with the uptrend level, but this is also in such a steep downtrend. You can see that trend's pretty predominantly down. But bottom line is, what goes down eventually goes up, right? Yeah. So, watching good old AMD and even some Nvidia. So if we go back up to Nvidia, you can see Nvidia is right at that start point. So, it's just a matter of, do we get acceptance above? Do we not? Blah, blah, blah. Just like back here, right? What goes down eventually gets positive and goes up. Usually. Maybe. Who knows, right? Even here, right? So, this is an oversold bounce, right? But right here, positive, a little bit of a long trade. What was down goes positive, up. So tracking AMD and Nvidia for the moment, just because they're two, fairly big tech stocks, if you may, semiconductors that are kind of have that sell move to them. Same thing with LLY here, E-Lily. This one's 780, but same jam. Again, this went into a sell move a couple weeks back, so we'll let this thing get beaten down for however long it wants. When it flips trend back to positive, we'll look for a little Momo up on the back on the upside. Yeah. Same thing with TSM, so pretty much just looking at everything that's gotten hit to the downside, not concerned about the ones that have already been on the long side. So hence not looking at things like, you know, Google, because Google started long weeks ago, right? Not looking at Microsoft. Microsoft started long weeks ago. So not that these things can't keep going, but I'm looking for uptrend starts, which would not be something like Apple. Even though it kind of did do a little bit of an uptrend bounce start today. But anyway, so I'd be looking at like NVIDIA. We'd be looking at LLY, TSM, maybe some UNP. AVGO actually just had a little bit of a buy move take place today. But anyways, JP Morgan's another one that's kind of been down. So somewhere on the banking, but yeah, I'm not a biggest fan of that guy. So AMD, Watch, UPS. Actually, you can already see I'm anchored on this. I did UPS the other day a little bit. Once it started getting positive over here, started riding it up some. And you can kind of see here, like, when's that move on the 30-minute fall apart. So you can see we got positive. Was up on UPS, right? And then trend, break, reset. Honeywell, this is actually debatable. But again, it's one of those situations where you're not at the start of the long, you're on the potential bounce and support hold, which can fail. So it's always the iffy, right? So again, it's not a perfect system, and you got to kind of gauge it how you want. But below, positive, uptrend breakout, right? And then relax, hold support, trying to hold support. So Honeywell's in a situation of it's trying to hold its uptrend, and if it's valid, then you'll keep boosting up. That's kind of it. So it's kind of limited risk in that sense that you're kind of near support. So yeah, because the reality is all you gotta do, you could be long in this with, and this is just simply looking at a couple like moving average in price, nothing momentum related, nothing about the stock, nothing about pretty much anything there, right? You can see pretty much clear as day, right? Again, you get positive over the 50, break out. Here's your back test of the 50, bounce, roll over. So it's in a support hold defense mode, not breakout long mode. Oh boy. Sorry, just yawning a little yawning. What about Procter and Shambles? I mean, here's another one. Again, kind of getting beaten down. These are some of the largest market cap stocks that I currently follow, but like even Procter and Gamble, down. So once that starts getting some love on the upside, maybe. But I would say the ones that are closest to are going to be NVIDIA and AMD in the sense that they're currently flirting with the levels. They're not away from them. So I'm keeping kind of close tabs on those guys the next couple days, just in case. What's really going to help, I would say, AMD and NVIDIA is if the market actually like supports a buy signal and doesn't go into a sell move, because obviously then the market stays positive. It's easier for things to go up, so on and so forth. So, yeah, we'll be keeping tabbies on these guys in NVIDIA, which is kind of happening arguably now-ish. QUBT. I want to take it long. My notes are sent right now. I'm waiting. Mike, you got 142 as a daily level for buy. 142 daily level. Yeah, I mean, I don't. 142. Maybe. I mean, yeah, whatever you watch, that's. I don't. There would be nothing there for me personally for the buy point. Just because I look at things a little different. I'm looking at the short-term trend, right? So my buy point is pretty much over under where we're at right now. So if I go and look at this in the real time, this is what it's going to look like. So right now we're battling the over under point. And now this 50 SMA that we're battling too, not that it matters entirely, it's kind of downsided for the moment. So there's a couple ways I actually like to look at these things. So when we go into a long move over the 30 SMA, it's kind of nice to backtrack the previous SMA rejection. So instead of necessarily saying like, oh, we're going into a long move and going for this high and say going for this high, I would actually aim for the previous 50 SMA breakdown. So instead of going for the high, I would go for where did the market break the 50 SMA down recently, which would be right there and right here. So if we get positive on the 50 SMA, we actually backtrack the previous breakdown level of the 50 SMA. So where the bears were performing the bearish roll below the 50 SMA, we take the new long to that location. And then prior to that was the breakdown up here. So you can see here the 50 SMA broke down all the way up there. That would be the next one. So using previous 50 SMA breakdowns as targets on new 30-minute longs up, and vice versa. So if you think of it the other way, it would be if you look at the previous buy move. So this is where Nvidia a couple weeks back went into a long, right? So over the 50 SMA, market is bullish, and then you will see it goes into a bearish move and does a move bearish to the previous 50 SMA buy point, and then there's your bounce, right? So even like this one here, so you can see the previous breakdown of the 50 SMA was here in the past. So we had broken down here, we go down, we enter a long move back to there, taking the new market back to what we would call the old signal. So new signal back to old signal, and vice versa. You can see it back here too with Nvidia. So we have this one isn't perfect. Actually, it kind of is perfect, to be honest. It's a little bit. So there's these two here. So check this. These work really well too. I know I'm giving out all the goods here, but that's what I do, and that's probably why we don't have 6,000 people on stream. But that's okay. So you have this breakout here along with the back test of the 50 SMA here. So you have a long start algorithm, think algorithms, long up, eventually goes into a sell move, back down to previous. Instead of looking at the low or this, I'm looking at where did the shift start and then the future there. All right. And then same thing here, right? You have a breakdown at the 50 SMA here that gets follow through. And then what you have is a long over the 50 SMA back to the previous start point. Hopefully that helped. It's basically supply and demand, but just using an SMA for specific supply and demand levels, really, is what it is. So the SMA dictates positive, negative trend, which if trend's turning positive, demand comes in. If trend's turning negative, supply comes in. So then using that old 50 SMA supply or demand as a future target point for the new bullish or bearish trend that ends up being activated. So with Nvidia, right, you can see, I mean, this is like the real-time example of when you get a little bit of a breakthrough, but it's just nothing, right? So it's in, if you go look at the 1 minute, and actually I could throw this on a downtrend too, because it's really downtrending, so I could take a trend line and go like that, and we could go look at it on the 1 minute or something like that, and that's really, That's really it right there. This is currently your downtrending 50 SMA. So this is a rejection point and a breakout. I'm not looking at any momentum with it, so I don't really pay attention to that. But yeah, you would have to look at individual momentum. A little bit of a momo. Let's see. Which I don't have on this one. I have on other charts, but I'm going to add it here. So 1 minute's nothing, 5 minutes positive, 30 minute. This is all kind of pointless at this. Usually the 1 and the 5, 30's neg, and we are on the 0 line. So Mac arguably slowing on the 5. I mean, it's just not ready. I mean, market always usually kind of, like I said, it can be tricky with individual stocks because they're a little bit more volatile than say something like the market, but really the same logic applies with both of them. And then again, if you look at the market today, the market isn't necessarily running today. So it's like you have Nvidia at a resistance and a breakout spot, but the overall market's not running. So unless it has catalysts on its own to start going into an uptrend, you might need some help from the markets. Good old Pepe. So kind of flirting, going and looking at our good old AM Dizzle. Again, this is a pretty steep SMA trend. So, again, it's kind of debatable whether we're going to get that break or the old shake and bake. Again, right now, equities in the market aren't really doing you any favor to keep things going up. You kind of have a roll going on with the SPY, you know. So, again, we're probably not in the break spot for the moment. But we should go back to the SPY because I already know what happened and you know what happened. So do you guys see what happened? Remember, you're supposed to stay long bias the market as long as it's what? Over the 1/5 minute volume weighted average price of the last buy move. So market is over yellow, positive, stays up, holds VWAP, then breaks VWAP, and then what? Resets the market back to the 50 SMA to restart the whole game over. So once again, everyone who buys this dip thinking that the market's just going up for forever eventually gets taken out below their average share price, volume weighted average price, and then volatility takes them back down to the 50 SMA. Very, very, very common to see this sort of thing happen on a day like today. There isn't trend. The equities markets are not advancing nor declining. You have a back and forth environment. It's figuring out direction, right? So when you kind of can suspect it's a day like today, you don't try to press things long for forever, nor do you try to press them short for forever, so on and so forth. But you also know that in this instance, the market would be long bias without a reset until you take out the main volume shelf to cause people to sell to move back down. I really don't use actually what I do use it for every once in a while now is when I'm searching for active penny stocks in the morning. Pretty much anything that triggers the AVOL, which is the magenta purple line on the volume system, usually those penny stocks blow up. So if like you're gonna go look at some penny stocks, and occasionally I'll kind of dabble with some here and there if I get the timing right, which means you have to usually be up really, really early in the morning. So I'm hardly ever up earlier in the morning. Like really, if you really want to mess with some penny, you have to be up at like basically at market open, 4 in the morning. That's it, because that's when they manipulate the stocks higher. Is right in the morning when no one's awake. That's when the algorithms run their manipulation by algorithms. Like, you know, the old saying is, you know, you want to trade a penny stock with high volume and a lot of liquidity. But the reason it has high volume and a lot of liquidity is because the insiders and what have you have triggered a buy algorithm on the market. They're purposely trying to get you involved. So it's not even necessarily that the stock is popular and it's hype. It's really because a buy algorithm's been triggered on it, which then blows the price up, and then that causes it to hit all of your scanners. So then all of everyone streaming and on YouTube and Ross Cameron, because obviously he's a big penny stock trader, it hits their scanners and it gets to their chat rooms, and then that's how the volume and it keeps blowing up. So it's really an objective to get people involved. It's not that it's not even that it's supposed to be popular or supposed to, it's insiders trigger, buy algorithm, launch stock up, then it hits your scanners, high day scanners, breakout scanners, then the retail comes in. So it's really their kind of objective to get eyes on it, is what the game is there. So that being said, the custom volume scanner works really, really well for kind of picking up on those stocks that, in the penny stock world, that can actually have some good days and good moves. Generally speaking, if they're not triggering the AVOL scan, then you just don't even mess with them. If they are triggering the AVOL scan, a lot of times they're going to have continuation, some bouncing, and some good momentum. And I also use that for some mid-cap stocks too, I've noticed. So that's another thing too. Like on the day, if you were to trade individual equities, what I've come to find too is a lot of times the custom AVOL continuation scan is going to have pretty good picks as well. So again, there's probably someone out there trying to short this market thinking that it's a breakdown, right? So you have an up move, and then this is the 50 SMA, and this is the 50 SMA. And so someone's probably shorting into that 50 SMA and just getting pushed out. And then not to mention, you had the bearish leg down from the high. So if we look at the bearish leg down, we would then expect probably a counter retrace somewhere if it would anchor to the right spot, basically into here. This is kind of a wide range, but yeah, you'd be looking at like a bounce back into somewhere around there. Unless they do the dumb slide, but it just based off of how scummy this market's been, it should be pretty easy to bounce the market up to there. And there you have it. And it's not even that, it's just simply the market's just going to and from people's volume is all. No problem. No problem. Bitcoin, why did you go down? Is it because I put a little box on the chart and then a bunch of people decide, maybe we should go short it? Maybe. You never know. But yeah, so again, remember we talked about, we're in resistance, most likely going to pull back, etc., etc. We'll first start targeting the micros down. So I went into here, the hourly, because the hourly was the only chart that I felt within this moment was somewhat readable in terms of like an established move up, right? You kind of had a move down, 1, 2, 3. Like there was enough there in a trend to kind of dictate that. But if I looked at a 30-minute, you had some green, some red, some green, red. So it's like kind of a choppier uptrend motion. This guy in the 15, you had green, red, green, red, green, red, green, red, green. So it's just like, Again, if you go to the 5-minute, you got all sorts of high lows in there. But if I dialed into a 1 hour, the 1 hour had a move without an established swing low. So I figured we probably retraced that 1 hour there. So then I just basically picked up the demand and volume weighted average prices of the last 1 hour swing move and figured we probably would attack some of that 1 hour trend stuff there. Hence why the box was there. If you ever see me draw a box, it pretty much just means I'm thinking that's where the target's at. Just like we did here on the 1 minute with the SPY right there, kind of. So hence the retrace back to start of the box and then have some resistance. But that's pretty much what I'm thinking. Oh, actually, SPY's below the 50 SMA. What am I? I'm on. Oh, no, that's a 15-minute. I'm like, that doesn't mean, that ain't right. So, again, we're just basically flirting with that 50 SMA. Let's check the SPX. See, the SPX is actually above. So you can see because but it's trending down, which is kind of dangerous, can be dangerous. So you can see that the SMA is actually trending down and price is above it. So basically that usually doesn't happen. So again, for example, let's say like the SMA was all the way down here and the price was up here. There's a good chance it would roll down to there because it wants to catch the 50 SMA. It's very challenging for the market to have a negatively sloped 50 SMA and the market get bought away from it. So do keep that in mind. Right, so when we see this negatively sloped SMA on the SPX, it's kind of like, it's a little sketch. A little sketch. Again, you can see NVIDIA is actually rejecting the resistance trend here. So again, we kind of had like a little bit of a mini, you can see it. I mean, it's up and then little roll. And that's where? Right into what? The 30-minute resistance. Boom. So again, that is NVIDIA not entering a break move and getting resistance off the top at the over-under bullish bearish trend. See that? It's clear as day. So that's the other thing you have to kind of be mindful of is when you use such a system that it is your start point, the over-under. Good bearish moves happen there and good bullish moves happen there. Now, granted, this is a nice bullish move up on the day, but this is simply a counter long back to, in this case, resistance, right? So this is what you saw was the market is actually in a bearish trend. This is just a bounce, which has not turned the trend positive yet, okay? So we're going to take a peek at AMD. AMD still just hanging out below its trend, et cetera, et cetera. And yeah, we'll probably call it there for the day. We'll be back on same time tomorrow. Same time. Cheers. Hopefully you guys had a good day. Hopefully a bunch of that stuff made sense. And we basically kept you... Oh, we definitely did. We definitely kept you exactly on the right side of the trend today, which was what? At any point in the stream, did we tell you to just slam stuff short, slam it long? No, no. Nope. We just gave you coherent... expectation of the market. And so far, if you're on the stream, you did not try to slam the market short. You didn't try to buy the market super long. You didn't. No, you just kind of hung out because, you know, it's a back and forth market until it's not. All right. So you guys have a good one. Cheers. And I will catch you on the next one, which will be tomorrow, 11:15, 11:30 or so. The streams are usually starting about 11 because we run our private group to about 11, and then I'll transition to here. So it's always going to be in that 11:15, 11:30s, right in that area. Once I hop off, maybe get a cup of coffee, get all the programs set up, and then hop on. So you guys have a good one. Take care, and then make sure to share our stream and all of the most popular YouTube streams for the stock market on YouTube, because I think that's the only way we're getting anybody else to see this stuff. So appreciate you guys. Have a good one.